live. Okay, good morning, everyone. I'm very excited to welcome you to our midweek session of the Forex Morning Mastery. First of all, pardon for me for the lateness. I had to sort out some things, and in fact, just to make this session uninterrupted, so we had to do some technical things, but thank goodness we are back on, and very glad to have you around with us this morning. So I welcome you all to our midweek review, and of course this week has been quite an interesting one so far. We've done fairly well across the asset we are monitoring, and of course we are looking forward to new trading opportunities as we head into the second half of the week. Now, for those who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. My own name is Sheriff Daramola, and for the next 30, 40, 50 minutes, depending on how long the session is going to take, we are going to be doing a follow-up detail on the asset we are monitoring. We have been monitoring the USOILSPOT, the GBP USD, and of course the XAUUSD. So we are going to be looking at how well these assets have done. We are checking into the fundamental factors, the technical details on the chart, with the utmost intent of identifying potential trading opportunity ahead of the second half of the week. And if you have any questions along the way, feel free to drop them in the comment section. I'm here and willing to be of help in that regard. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that said here, let's dive right into the business for today. And before I go into the chart, it's important that we take a quick look at the market dynamic around the US dollar. Remember, the US dollar is involved in all of the assets we are monitoring this week, and it's important for us to know what is really driving the US dollar itself. So at the moment, we've seen some signs that the US dollar is gaining traction, like a rebound sort of a thing. So if I share my screen here, this is the DXY, that is the US dollar index, and we are looking at the 4 hours time frame. And of course, one of the major factors that has supported this rebound is the trade war de-escalation. We saw the U.S. Treasury Secretary yesterday called the U.S.-China tariff war unsustainable, and it also went ahead to hint at progress in negotiation, which for me is likely going to reduce geopolitical fear and support the US dollar stability. And if we look at the DXY here, though the market has been on a strong bearish move, as you will see, price continues to find lower lows and lower highs. However, since Monday's session, we begin to notice how it has become difficult for sellers to break through that $98 area. What a psychological level that is, considering the round figure of that price. And in the last 48, 60 hours, we've seen price action climb back into the trend line, and the last 24 hours has seen some consolidation around that particular area. Now, to further support the US dollar, we saw President Trump publicly stated that he has no intention of firing the Fed chairman, calming fears around central bank politicization, and of course restoring investors' confidence in the US dollar. Remember, I told us all on Monday that during the weekend, Trump threatened to sack the Fed chairman, which obviously sent a ripple to the market, and investors begin to pull their money out of the US dollar. And with this development, I think this could secure a Fed Reserve independence, which could further push price of the US dollar to the upside. Now, after several sessions of being punished by, after several sessions of the US dollar being punished over Trump's comment on the Fed, the US dollar is seeing a technical and sentimental rebound at this point, though we have a range bound, and the fact that price still remains below this descending trend line, for me still shows tendencies that sellers could still have their way, that the dollar is not really at that point where we can say it is on the verge of moving to the upside. And of course, to confirm a bullish move, we will need a comfortable breakout retest of that trend line to support that bullish idea. Now, this does not mean that the dollar does not have some fundamental factors that are against it. For instance, the rate cut expectations, the bets keep mounting at this point. In fact, this morning while I looked at the CME Fetch Watch tool, traders are pricing in a 3 Fed rate cuts by year end, with the first one pegged at 25 basis point in June, and this is majorly a US dollar negative in the medium term. Then the recent US data shows signs of slowdown and upcoming. Okay, let's look at the economic calendar together. So we saw which one is that? Okay, so we saw the Richmond Fed Manufacturing Index coming in at a deficit of 13 yesterday, as against the expectation of a deficit of 6, and even way below the previous month, which was pegged at the deficit of 4. Then we saw the 2-year note auction drop too as well. And then last week we saw the CPI data coming in lower than expectations. So for me, the fundamentals are not really supporting the US dollar at this juncture. However, today everyone is looking forward to the which one is that, the S&P Global publication, which is coming up around 1:45 p.m. UTC. That's about 2:45 p.m. West African time. And of course, this data here is going to be giving us an insight into how well the service and manufacturing sector of the United States is doing. Now, remember, this is a PMI data, that is Purchasing Managers Index. So it has an index of 0 to 100. So if the data comes in above 50, that shows that there is an expansion in that sector. But if it comes in lower than 50, then there is a contraction in that sector. Now, let's look at what the data was last month. So for the manufacturing PMI, we saw a 50.2, a little bit higher than the 50 mark, and the expectations for the month of April is pegged at 49.4. So I think economists are expecting a contraction in the manufacturing sector. Then if we look at the service sector, we had a 54.4 for last month, and economists are projecting a 52.8. So from all ramifications, it shows that expectations are a little bit low on the S&P Global publication. So we look forward to see what the actual data is going to be. Will it be just as expected, below expectations, or even beyond expectations? So in short, the US PMI data will either validate or disrupt the current rebound we are seeing on the chart. So we are going to be using that as our pivot signal for directional buyers around this particular area. So if the US dollar breaks above the $99.50 level, or probably break out of the $100 barrier on a stronger data, then that will be an hawkish price, which could support the price to the upside. But if the data comes in lower, we may likely see price break down the support line to incite a sell-off. So I really want to share with us all an insight into the US dollar market dynamics so that we can have an insight into what we are looking forward to as we delve into the major assets we are monitoring for this week. So that is basically what the US dollar is saying at this point in time. So I hope it is quite clear for everyone. If not, let me know in the comment section what your thoughts are and how you what you think about the current market dynamic. So with that said here, I will look into the comment section to see if there are any questions as we delve into the assets we are monitoring for this week. I see you, Jonah Aruna. Good morning to you. Glad to have you around. How are you doing today? Trust you are doing very well. All right. So with that said here, let's move into the charts. So the first asset we are going to be looking at this morning, as always, is the USOILSPOT. So we are going into our execution time frame. And of course, I can remember on Monday we were selling the USOILSPOT, remember? So this was the technical structure we identified here on Monday. So let me zoom in so we can see things clearly. And of course, we acknowledge the fact that the week started on a strong bearish note. This was where price started the week around the $62.70 level. Then we saw price drop to the downside and found a support around the $62.60 level. We saw continued buy pressure here. And one of the things we discussed here on Monday is that we will look out to sell the USOILSPOT at the breakdown of the $62.60 level. And of course, we saw price break down the structure during the Forex Morning Mastery session on Monday. It was during that session we saw our sell position triggered and price in fact moved over 85 pips before buy pressure resumed. And of course, if you had moved your stop losses accordingly, like we usually do, whenever price moves in our favor, you must have been taken out with a reasonable amount of profit or a worst case scenario break even. So since we got taken out of that sell position, I haven't been trading the USOILSPOT throughout yesterday. I was out of station, and during the course of yesterday's trading session, we noticed how the USOILSPOT was gaining momentum gradually. And what could be the reason behind this sudden drive in momentum to the upside? Well, first of all, the latest US sanction targeting I can remember that name, Saeed Asadola or something like that, and his network is expected to curb Iranian oil export. And of course, this is going to be tightening the global supply. How you know our simple economics, whenever supply is disrupted, demand usually increases, and when demand increases, what happens to price? Price will definitely rise. Now, to further support this idea is the latest API crude oil stock drawdown, where we saw the API data show a 4.6 million barrel draw. So let me look at the economic. Let's look at it together here. So we saw the API weekly crude oil stockpile yesterday night coming in at a deficit of 4.6 million barrel for the previous week. Now, this is a huge one. The previous month grew by 2.4, as you can see here. Now, we saw a deficit of 4.6 million, which shows us that demand has increased in the United States. Now, due to the increase in demand, they had to leverage on the crude oil stock to feed the market, resulting in a drawdown of 4.6 million. Now, this is a very good sign for buyers of crude oil, and this could be one of the major reasons we saw the prices of crude oil begin to rise in the last 24 to 30 hours. Now, statement from U.S. officials signal potential easing of U.S.-China trade tensions, which generally lift global demand outlook for oil prices. So for me, I'm beginning to think that the path of least resistance for crude oil remains to the upside based on this current fundamental factors we just talked about. Now, to further support this is the Fed stability reassurance, where we saw Trump confirming that he will not be sacking the Fed chairman, which further encourage risk on position, including commodities like the oil asset at this point. Now, in as much as the path of least resistance is looking bullish, let me say in the short term, we cannot ignore the potentials that sellers can also come in due to tariffs still in place at the moment. He hasn't dropped the tariff. Trump has ruled out massive hikes like the 145% he placed on China products, though he confirmed that tariff won't be fully lifted, which may limit global economic rebound and cap all price upside trajectory. Now, this for me could send price, causing market to take some profit off the market, resulting in some bearish pressure. So we need to take into account both possibilities, though the momentum to the upside is looking very possible, but we will not ignore the potentials that sellers will come in. So we are going to be taking all of this into account while we strategize for the next move. Now, how do we intend to trade this asset today? So we are going to be following the trend as always. At the moment, if you look at the structure here, you will see that since the beginning of the week, that is on Monday, price had consistently and uniformly respected a trend line. So after connecting the series of higher lows, look at how beautifully this trend line is formed. Now, you know how we use our trend lines in this community. As long as price remains above them, we will continue to look out for patterns and structures that support buying ideas. So we'll continue to hold on to bullish potentials as long as price remains above this trend line. So that is what we are going to be doing from here. Then we're also going to be looking forward to the EIA report today. So today is Wednesday, April 23rd, and we are looking at the EIA crude oil stockpile coming in by 2:30 p.m. UTC. So that's about 3:30 p.m. West African time. And from the recent projection, market participants and economists are looking forward to a 1.6 million barrel increase for last week compared to the previous week, the upper week, which was at 0.515, which could also be a driving factor for the U.S. crude oil. So if the official EIA data shows a small drawdown or a surprise build, we will want to consider short-term setup, maybe back to the trend line. And of course, we are also going to be watching out for any escalation with Iran or trade deal news. Of course, it can cause intraday spikes. So we want to be staying around this for the structure. So at the moment, this oil rally isn't just driven by inventory numbers. It is driven by geopolitics, sanctions, and of course market mood. So we want to keep our eye on real triggers like the EIA data coming up later today. That is where the next big intraday move will likely come from. So from a technical standpoint, I want to remain bullish, and of course I have marked out another resistance line. As you will see here, the last 4 hours I've seen price action find some selling pressure here. Buyers appears to be finding a barrier around that area. As the last 4 hours, I've seen sellers continue to negate any attempt by buyers to break out of that structure. So will this be a platform that will reverse price? leading to the breakdown of this trend line to incite a sell-off? Or are we going to be seeing price breakout of the structure to incite the uptrend continuation? So as a result of this, I placed a buy stop order above the $64.50 level. That is this resistance line. And as you will see at the bottom of your screen, I already have a buy position running on the US crude oil at this point in time. I think it's running with about 4 pips thereabout at the moment. Hopefully the price of crude oil will continue to rise in our favor. So if you do want to join me on this risk, we are open to buying ideas as long as price remains above this trend line. Even if we see selling pressure persist here, remember we still have the trend line here, which could be a support line to push price higher. So if we are buying now, we want to give enough breathing space for price action to move around. So we are looking at placing stop losses below the trend line just to give enough breathing space for price action to move around. So that's going to be about 60 to 65 pips of stop loss on this bullish setup. I hope I made myself clear on that one. So we remain bullish as long as price remains above this trend line. And of course, this supports the fundamental factors around the UN sanction on Iran, the large API crude stock drawdown, and of course, improve risk sentiment on trade talks, right? However, if the sentiment begins to lean towards the tariffs in place, which is still in place, or the EIA data still pending coming up later today, and the sentiment begins to shift, well, the only condition that will make me sell the US crude oil is for me to see price break down the $62.70 level. Remember, this is the point where we saw that big bearish move at the beginning of the week, resulting in that move to the downside. So if price can come below the $62.70 level, I believe we are back within seller's territory, and it could be a platform to push price south. Now, there is something about this structure here that may allow us to join a sell even before that breakdown happened, and that is this ascending trend line we have here. So if we see something like this happen, price breakdown, retest that trend line, that is, buyers find it difficult to climb back above the ascending trend line, something like this, if we start seeing continuous selling pressure below the structure on our, let's say, 15 minutes time frame, that could give us an opportunity to sell. Then with a sell stop order below the $62.70 level, we have the privilege of maximizing the bearish move. So that is how we are going to be trading the US crude oil today. So let's see how the market will play out. Like I said earlier, I already have a buy position running, though it is in loss at this juncture. Hopefully it recovers, but as long as price remains above that trend line, we remain bullish. But if the trend line gets broken, retested, then we will be joining a sell, then add more at the breakdown of the $62.70 level. So that is my simple view on the US crude oil for today. If you have any questions or you need some clarifications, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. I guess we are all on the same page, right? No questions. So I want to believe that we are all intact and ready to be part of today's trading session. Duly mark out the levels we've marked out here. The trend line, they are going to be playing a significant role in guiding our trading decisions today. And like I said, we remain bullish at this juncture. Price has consistently and uniformly found higher highs and higher lows, giving us that trend line to work with for today's trading session. So I wish us all the best of luck, and of course, if anything new comes up along the day, I will definitely update us on my Telegram platform. So best of luck everyone on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at is the GBP USD, that is the pound sterling against the US dollar. And of course, we came back to start trading the GBP USD. We have been following the USDJPY instead for about 3-4 weeks thereabout, and we've done fairly well on that one. But due to popular demand on Monday, majority of us said that we should look at the GBP USD, and of course we are in a pretty situation at the moment. As we can see, the pound sterling is hanging in there thanks to the weakness in the US dollar, and not the strength of its own at all. So it's not the strength of the pound sterling right now that is pushing price higher. It's because of the weakness of the US dollar at this point in time. And of course, if we are maintaining this buy position, we want to make sure that we are not following this uptrend blindly, because the dollar's next move could change the dynamic. We don't know what's going to happen today. Remember, everyone is looking forward to the S&P global publication, and if it comes in favor of the US dollar, we may likely see price drop to the downside. Now, if we look at the technical details on the chart, this was what we were looking at the beginning of the week, right? We saw price action within a range bound structure, as you can see. Oh, sorry, I'm mixing the session with another session. Sorry about that. I think we were looking at the USDJPY on Monday, right? I think we were looking at the USDJPY, isn't it? Please let me know in the comment section. I think I am mixing things up. I had a session with someone who I treated the JPUSD with. So please let me know in the comment section, are we together on the GBP USD or is it the USD JPY instead? I would love to hear from you guys what that is. I think it's the USD JPY. I think so. I think it's the USD JPY. It's the USD JPY we worked on. All right, thank you very much, Jonah Arun. I knew it. I knew I was mixing something up somewhere. All right, so let's go back to the USD JPY. Sorry about that. Okay, so the next asset we are looking at is the USD JPY. And of course, we are in a pretty good situation on this asset. On Monday, we sold the USD JPY at the 141.700, especially for those of us who are part of the Forex market prep. We had the privilege of selling right at this 142.00 area. That is for those of us who are live on the Forex market prep. That was on Sunday, and we were privileged to join this move to the downside over 200 pips before that bullish momentum began here yesterday morning. But for those of us who are part of the Forex Morning Mastery, this was the situation we saw here on Monday. We saw this whole consolidation happen prior to the beginning of our live session, and we were looking at selling the breakdown of the 140.550 area. Now, before the breakdown happened, we actually had a buy position. Remember, we sorted out a 15 minutes time frame setup, which I did updated us after the live session. Let's look at it together. So this was the structure we were marking out at the end of Forex Morning Mastery on Wednesday, where we saw this this descending triangle, which is known to be a downtrend continuation pattern. And of course, I made mention here on that day that if it happens that price breaks out, retest the 140.700, you know, it is not all the time that price follows the technical expectations in the book. So we bought this at this point. Price moved about 35 pips thereabout before it declined. And of course, if you moved your stop losses, I think I mentioned that in my commentary on the follow-up on that day, that we should all move stop losses and secure the position. So if you had moved it to break even, you must have been taken out with the worst case scenario break even. And of course, if you had moved it to maybe some small size of profit, then you will be on the positive side. Then yesterday we saw price break down the 140.550 as projected to give about 60 pips before the buy potential resumed again in this market. So it's been a little bit choppy before we saw the recent rise in the US dollar, as you can see here, following the latest development in the market. Now, what are the things that is driving the US dollar market at this moment? I think we talked about some of them earlier. All right. So, according to the fundamentals, we saw the report from Japan yesterday. Hold on a second. Let me include the Japanese economic docket. So we will, okay, this is it right here. So apply filter and let's see. Okay, so we saw here yesterday a weak Japanese manufacturing data. As you can see here, the manufacturing PMI has now contracted for 10 consecutive months, with April printing a 48.5, still under the 50 mark, or let's say the 50 threshold, which shows that there is a contraction in the manufacturing sector in the Japanese economic docket. And of course, the de-escalation signs in the US-China trade tensions has also calmed down geopolitical tensions, and this also triggers flows away from the US dollar in that moment. And so we saw, as a result of this, the price of the US dollar rose, did a little bit of recovery, stopped around the 143.250 before we saw the recent decline, which may be a retracement move or maybe the beginning of another downtrend move. And of course, this old bearish move started during the Asian session. Now, Trump backing off on sacking the Fed chairman, of course, has improved risk sentiment and, of course, helped the dollar to bounce, which pressured the Japanese yen during the Asian session. So at this moment, though Optimistic signals still exist, but there is no immediate US-Japan trade deal at the moment. The Japan's minister had warned us last week that it may take time to bridge gaps in the negotiation, and this may keep the yen's upside trajectory in caution. But if we look at things from a long-term perspective, remember we saw this on the 4 or daily time frame, that the price of the yen had been dropping. I've been increasing since the beginning of the year. I think we saw this on the daily time frame. Let me see. Yes, can you see, since the beginning of the year, the price of the yen has been rising and the dollar continued to drop, as you can see here. The rising market believe that the Bank of Japan will continue to raise interest rates, builds the fundamental support for the yen throughout the year. And of course, recently, the Fed's is seen as cutting rates multiple times this year, putting downward pressure on the US dollar. So that differential expectation had favored the yen throughout the year. Now, in recent time, what is really going on in this market? So though there has been some hint that the US and Japan are moving closer to a trade deal, which is giving the yen some extra support at the moment. And of course, we saw the service sector also did very well. We had a 52.2 coming yesterday above the 50 mark, signaling expansion and slightly improving confidence in the Japanese domestic economy. So at this point in time, how is the market digesting this information? Are they willing to continue to buy the US dollar, or is this just a retracement and another paving way for another wave of bearish momentum to the downside? So we are not going to be fooled by the Japanese yen softness on good risk days. So the bigger divergence still lies in favor of the yen. So at this point in time, we have a situation here where price is currently trading below the key level we marked out at the beginning of the week, right? So this is our key level, the 142.00 area, and you know how we use our key level. As long as price remains below the key level, we want to be looking out for patterns and structures that support selling ideas. We will not consider buying unless that key level is breached and broken to the upside. And I showed us all on Monday how that key level at the 142 had been a strong memory for buying power for as far as I think 5, 6, 7 years ago. But right now, the crucial moment here is for us to see how market participants will be reacting to this key level. Now, as a result of this, I have a new technical setup on the 15 minutes time frame, which I will share with you now. So this is what I saw this morning while I was looking at the 15 minutes time frame. So we can see we have a descending trend line. I think we have a couple of them actually. So I will just lessen the thickness of this one. So this is the major one, as you will see here. After the US dollar did a rebound, we saw price consistently find lower highs. Now, something interesting about this downtrend is that despite we saw these lower highs, we are yet to see a lower low. Now, for me, this is a red flag. It shows that buyers are still very present. As you can see, this 141.600 zone, a level that served as the platform for this uptrend scenario we saw yesterday, is beginning to be a barrier for sellers. As you will see, every attempt by sellers to break through during the Asian session failed significantly, and right now price is back into that particular structure. So will this be a platform that will push price higher, or are we going to see a situation where this level is going to be broken to the downside to incite another wave of bearish momentum? So this morning while I was doing this, I had to place a sell stop order below the 141.600, as you will see here. And of course, if you look at the bottom of your screen, you will see that I already have a sell position triggered, which is currently running in a loss of about 15 pips. So I'm being hopeful that this will thrive to the downside. So we have a simple setup to guide trading decisions today. We have a range bound structure. Our key level identified at the 142.00 level still remains very much intact. So I'm looking to maintain the bearish bias if this price remains below that descending trend line. So even if it climbs up a little bit, I'm still very bearish, as we could see a bust up there that could welcome the downtrend move. So for those of us who are yet to open a position at this juncture, you might want to be placing a sell stop order below the 141.600 to capture that downtrend move if it finally happens. All right. However, if price continues to find buy pressure like it has been doing in the last 12 hours or so, well, it could be a platform that will send price climbing to the upside. And as a result of this, I already have a buy stop order above the 142.00 area to capture that uptrend move if it finally happens. You will see it at the bottom of your screen. I have a pending buy stop order to capture that uptrend scenario if it happens. So and that's our key level for the week, of course. But I still think that if buyers are likely going to be taking over this market, we could see an opportunity to buy even before the breakout of that key level happen. That is, if we can see something like price breaking out, retesting the trend line. So if price can break out, retest the trend line, and we continue to see buy pressure above the trend line, we can join a bullish move. And of course, the trigger of the 142.00 level will trigger the second buy position, helping us maximize the potential of that bullish move. So at this juncture, we want to keep our options open. Anything could happen. We have a range bound structure. Negotiation is still going on between buyers and sellers, and of course the S&P Global publication coming up in about how many hours from now? We are looking at 11, 12, 1, 2, and about 4 hours from now is going to be playing a significant role in that regard. So let's see how the market will play out today. And of course, I will be updating us accordingly on my Telegram platform as I continue to monitor price action. So that is my simple view on the USDJPY for today. If you have any questions, feel free to let me know in the comment section. So I will take about 5-10 seconds off again. Let's see if there are any questions before we move on to the final assets on our watch list for today. Stay tuned in. All right. So, in the absence of no questions, I guess we are all on the same page. So, we are looking to see how the market will play out around the support line. I'm hopeful that the momentum will go bearish, But if it doesn't, we are hoping to upward trajectory. Only if price breaks out retest structure, we can now join the bullish move and of course add more at the breakout of the 142. But in the meantime, as long as price still remains below this descending trend line, bearish bias still remains on the table. So I wish us all the best of luck on the USDJPY. So moving on to the next asset, and of course the final one for the week. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a week we have here, as we saw the price of gold hit another record high at the $3,500 area before we saw that massive move to the downside yesterday. And like I told you, I didn't trade yesterday, so I was off the charts, only to come in this morning to see that massive move to the downside. And some of us did take some of these positions. I got some messages on my Telegram as to how they joined that bearish move to the downside. So well, for me, I didn't take that. In fact, I didn't even maximize that upward move, as I left the market around the 3,405 area. That was about 700 pips in that regard. And since then, we saw price move later during the Asian session to hit, during the New York session on Monday to hit that record high. For those of us who are part of this profitable journey, well done and kudos to you guys. Now we are at a critical juncture right now. Price is back into that key level we marked out at the beginning of the week. Not only that key level, it is also back into that ascending trend line I showed you in my weekend video on the gold commodity. So let me quickly share with you what things are looking like on the 4 hours time frame. So right here on the 4 hours time frame, we had a beautiful ascending channel where the resistant line of the ascending channel is serving as the major trend line for this week's trading session. And of course, we saw when price climbed up to the record high, it came back to retest the trend line. And ever since price tested that trend line, we have been noticing buy pressure around that area. Now, what is going to happen today? Will price respect that trend line to incite another uptrend move, or are we going to see this trend line broken to the downside to incite a sell continuation? Now, before we go into the technical details, it's important for us all to have an insight into the reason behind this drop in gold prices, so that we can know if this is going to continue to become the driver of the sentiment in the market, or this could just be a profit-taking activity to continue the trend to the upside. Now, for the way things are going right now, the stronger global risk appetite led to the sharp decline that we saw here, as the equity market gained from the gold commodity. We saw outflows from safe haven assets as market participants start taking profit off the market. And one of the major reasons why they started taking profit off the market, well, if we're looking at it from the fundamental aspects, well, signals of trade de-escalations with China and Trump's backing off from his threats against the Fed chairman lifted investor sentiment and, of course, hurt the demand for safe haven assets. Then the fact that price action is at an all-time high, a lot of investors are taking some profit off the chart, leading to a technical pullback. Now, how far will this pullback go? We don't know yet. It depends on the technical structure we see here. But I want to consider the fact that we are within uncharted territory. There is overbought conditions at the moment. And so a correction was technically due, actually, especially with improving news flow and de-escalating tension in the financial space. Now, in as much as this is the major reason behind the massive pullback we witnessed yesterday, the gold still has a tendency of continuing the uptrend. Well, the Fed rate cut expectation is still there. Remember, I told you earlier, market continue to price in multiple Fed rate cuts starting from June. And we all know lower rates reduce opportunity costs for holding non-yielding asset like gold, making it more attractive for investors and market participants with other currencies. And of course, the Fed rate cut expectations has led to a weaker US dollar. Now, despite attempts at recovery, which I shared with you on the DXY, the US dollar remains very, very weak due to policy uncertainty, and Fed is in expectation, and this could support the gold further to the upside. And of course, Trump's unpredictability is not helping matters at all, as this is stands as regards to trade continues to erode confidence in the US economy, and this has led to geopolitical fragility which continues to persist. So for me, I still strongly believe that the gold still has a room to continue the uptrend move, especially as it oscillates around that ascending trend line we marked out earlier. So will price respect the trend line? I think so. So we are going to be waiting for confirmation. So we're not going to be rushing to either buy or sell gold unless there is a strong follow through around the structure that we are seeing here. Then we're also going to be staying closely in tune to the US global PMI data, which I said earlier that will be coming up around 1:45 p.m. UTC. That's about 2:45 p.m. West African time. So let us mark out the timing for this one so that we're going to look out for structural details that will show us how market participants are anticipating the event. So in that regard, in anticipation of that event, I shared with us all an update on the 15 minutes time frame this morning. So let's look at it together, what I shared with you. So I will zoom in so we can see things more clearly. In fact, I don't know what happened here. I placed a buy stop order on gold above the 3,320. I don't know why it did not trigger at all. I don't know why. I just saw my thing right now, and I saw that gold is not yet has not yet entered. But for those of you who are joined that buy, as I illustrated in my commentary this morning, that is, we are going to be buying around the 3,320. Well done, kudos to you. So you currently be running with about 170 pips in profit at this point. So well done if you are taking advantage of that move. So please move your stop losses right now, secure the position as we continue to monitor price action around this particular area. Now, for those of us who are yet to join the move, well, let's exercise patience and see how the market is going to play out around the structure. How are we going to see price come back to retest the structure? Well, let's wait and see. If it does, continue buy pressure here on the 15 minutes time frame, or a much lower time frame like the 5 minutes time frame will welcome buying ideas. Now, we should take note that it is not all the time this situation of pullback happens. So sometimes we can see price just go through a consolidation phase, evolve into an uptrend continuation pattern, break out, retest the resistance line of the pattern to continue the uptrend move. So for that purpose, let's mark out a structure that we will be using to navigate that environment if we see a consolidation happen. So I'm looking at the 3,339 level, and the reason why that is will be explained shortly. So let me just mark this out here, $3,399 area. So we have a level already, a resistant line, and of course you can see here that the last 45 minutes or so we have noticed some selling pressure here. Buyers are struggling to break through that structure, and one thing about that structure is that it has also been a barrier for buyers at some point in time during the later part of yesterday, and during the Asian session we saw how that 3,339 level became a platform to push price higher, and we saw it happen again during the later part of the Asian session. We saw buy pressure here, and then during the New London session we saw price break down the structure. So we can see how the 3,339 level had served as both support and resistant line. So if it's going to be serving as a resistant line, we could see it bring price back into the key level to retest the structure that was broken to incite an uptrend move, or coming down to retest this trend line. Let me show you again. So this descending trend line, it could come back to retest that descending trend line to gain some liquidity to push price higher. So let's see if that level is going to serve as a barrier going forward. Now, if it happens that that level gets broken, breached to the upside, then this could welcome uptrend continuation. So that is basically what I am looking at around the structure to maximize trading opportunity on the XAUUSD today. So for those of us who capitalized on the buy of the 3,320 level, please ensure you move your stop losses and secure the current buy position. For those of us who are yet to take a trade, let's exercise patience and see if the price will come back, retest the structures to continue the uptrend move, or break out of the 3,339 to inside the uptrend move. So that is basically what we are looking at today. Simple setup we have here. Let's see how the market is going to play out around the structure. So I want to wish us all the best of luck, and before I go on to do more on that, let's see if there are any questions. If you need some clarifications, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. And for those of you who had clicked on the like button supporting this community to grow, thank you very much as you do so. And for those of you who are yet to do so, this is the cheapest way you can actually support this community, and at the same time your likes goes a long way in inspiring me to continue to do more of this. So please click on that like button, and thank you very much as you do so. So let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. So, in the absence of no questions, I guess we are all on the same page. You are very much welcome, Jonah Aruna. I'm glad to have you with us this morning, and I wish you the best of luck today. So, today we were able to run the three financial instruments on our watch list, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD. And thankfully we were able to mark out simple trading setups around the market structures today to help us navigate the market. I do hope you marked out the structures like we did. If you had done so, well done, kudos to you. So all we need to do right now is sit back, relax, exercise patience, and allow the structures to mature. And if it does, we jump into the trade accordingly, and always ensure that you move your stop losses accordingly as soon as price moves significantly in our favor. Always remember, every decision we make in the financial market is more or less an educated guess. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.